All right. Professor Michael McCarthy, thank you so much for doing this with us. You were one of the names that came up early on when we incepted the podcast, even though I didn't have the pleasure to meet you yet. So essentially then the question is, how are you?
I'm good. Thank you for having me on the show. It's good to be here.
Yeah, thank you for coming. So to create context, who are you?
Oh boy, who am I? I would probably say, for me personally, I would say I'm a lifelong learner, and I've manifested that through having 6 startups, and now I've turned that into teaching at the college level and executive ed.
Okay.
So learning and then flipping what I've learned into teaching.
So when did you start essentially building these startups? What was your first?
I was 16 when the first one happened. It was against my will. I remember sitting at the kitchen table in Ellicott City, Maryland, where I grew up. And it was summertime. I have a sister that's a year older, and my dad had this rule in the house: my money, my rules. So it was like a dictatorship, basically. And he said, "You're old enough to get a job, so I want you to get a summer job."
Right.
And I said, "Fine." I was sort of curious about it because I'd never done one before. I mean, I'd shoveled the snow for the neighbor for $5, so I kind of
You've done something.
So I thought, okay, this would be sort of interesting. But what surprised me is I just assumed that you went into a store or a business, you filled out the application, and you got a job.
Right.
So that was the interview process that sort of threw me, and I didn't even get callbacks. No one even called me, like nothing. But my friends were getting jobs, so I knew it was happening. It just wasn't happening for me. And so I started to panic, and then I lowered my standards and I applied to McDonald's, and I was really embarrassed. I was like, I really don't want this job because I don't want to like sell French fries to my friends. So I didn't want to see them. Yeah. Then McDonald's didn't call, and I thought,
presumptuous of you then.
Yeah, I thought, I'm in trouble now.
Yeah.
And so I said to my father, well, now what?
Yeah.
Ellicott City, Maryland's not big. There's only so many places you can apply.
Yeah.
And he said, well, if no one's going to hire you, you're going to have to make your own business. And then I panicked even more. And I said, if I can't even get a job as an employee, what am I going to do as an employer? Like you're crazy.
Yeah.
And he's like, no, you're gonna start your own business. And I was like, doing what? And he owned a paper company, so he would make anything out of paper. He would make the parking tickets for Baltimore City. Back then, every Mother's Day gift in the United States was Whitman's chocolate sampler box, a box of chocolate from Whitman's. And my dad made the Whitman's chocolate box.
Oh, wow.
So anything made out of paper. And he said, you'll sell copier paper over the phone. And this is before cold calling as well.
Right.
And I'm like, how do I sell copier paper? And he's like, it's just paper. It's like, it's not that hard. I'm like, okay, I get the paper part. I get it.
Yeah.
And
you meant the how do you actually convince people to buy paper?
Yeah. So then he gets me even more scared, and he forces me to borrow $150 from him.
Okay.
So I remember this, $135 was for a new phone line in the house. We already had a phone.
Right.
But he said I couldn't use the house phone.
Right.
I had to have my own dedicated phone, which I thought was a total waste of money. And he's like, no, you're going to take it seriously. So I had to borrow money to get a phone. And then the other $15 went for a list of all the businesses in the area. It was a Chamber of Commerce list of businesses with.
So he gave you a Rolodex.
Basically, yeah. It was like my lead list.
Yeah.
And then he sticks me on the kitchen table. My sister goes off to go play golf at the country club. My mom she's playing golf. My dad goes to work, and I'm sitting at home at the kitchen table with like the smile and dial. And I was petrified, so I had to like get on the phone and say, "Hey, do you want to buy paper from me?" And the first day, I hated it. It was just bad. And then on the second day, it was still hell. And I left, And I remember it was a Tuesday because I was in the Tuesday night like junior golf league thing where we just kind of go and shoot like 200 for a round of golf.
Yeah.
And I came back and there were 3 messages on the kitchen table from people who I'd left messages with that wanted me to call them back. And one was an order for $150.
Oh.
And I made $150. And for me, that was a fortune.
You can pay back your investor.
Yeah, paid off Dad, got rid of him.
Yeah.
So that actually excited me that I could create money out of thin air. That excited me. I didn't like what I was doing, but I really liked the results that I could talk and just create money out of the ether.
That's powerful.
And then I ended up getting this one guy on the phone. He worked at Baltimore Air Coil. Those are massive air conditioners for skyscrapers. And I didn't know what an air coil was. I said, like, what's an air coil? He's like, oh, it's a big air conditioner for a building. I was like, oh, okay. And he ran the copy department. He was not the buyer. He wouldn't put me in touch with the buyer. So I'm talking to him. There's not much to talk about with copy or paper. There's not much to say.
Right.
But he did tell me that it was his first year of being able to do the buying decision. I said, oh, okay. And I remember my father specifically saying to me, don't ask them what they're paying. It's rude.
Okay.
I said, okay. But I thought he doesn't know that because he told me it was his first year. So I said, what are you paying? And he told me. And I said, okay, if I come in a penny under, will I get the contract? And he said, yes. So we're like back and forth. And my father said that since I was with his company, I was getting free shipping. And copier paper is really heavy, especially a year's supply of it for this big company.
Yeah.
So I gave the guy a quote. This was about 3 weeks into it. And I said, I can come in a penny under. Can I have the contract? He said, yes. And I said, shipping is not included because it's so heavy. He goes, I understand that. So in today's dollars, the annual shipping cost was $250,000.
Whoa.
So I made $250,000 in my first 3 weeks. And I was like, wow, I love this.
That is
So I paid for college.
amazing.
Yeah, I paid for 4 years at NYU in 3 weeks.
Wow.
And I was super psyched. However, the funny part was I was miserable. I absolutely hated.
What made you miserable about it though?
I was
if
alone.
You're having these.
I was alone. It was a beautiful summer days. I'm alone in the house, sitting at the kitchen table, just calling people who didn't want my phone call. People weren't like, "Oh, I'm so glad you called."
Yeah, no.
no one wanted it.
No, you can't excite people about paper.
And I wasn't resilient. I didn't have anything like, smile and dial, or it's just business. It's a numbers game. I didn't have any resources at all. I was more like, they don't like me and they're letting me know that.
Yeah.
So I hated doing it. And I just remember my father's words, my money, my rules. And I thought, I just got my father off my back. And I took that as really like a blessing. So I thought, college is paid for, so I don't have to worry about him commanding me around. So I sold the business to my sister for $5,000. My father was pissed.
Right.
He's like, keep doing it. I basically said, I got the money that I wanted, and now I'm done. But what's important to me, which I didn't have this well thought out at the age of 16.
No.
But my instinct was, if I'm not happy with what I'm doing on a daily basis, I'm not going to continue doing it. And so I quit. And he was pissed, and I just said back to him, my money, my rules.
So that's awesome, because you're essentially kind of, this is one thing that we always kind of like go back to that I notice, especially when I talk to other younger entrepreneurs, and that is that idea of gaining permission, whether it's subconscious or directly. On some level, young people feel that, some of them don't even think that they can be an entrepreneur, like you early on, right? Until you're told by your dad, no, you can do it. This is how you do it. I'll help you through, but this is how you do it. Mm-hmm. And then you do it, and then suddenly you're transformed into the person who gives themselves permission. So that's kind of like an interesting, how do people short of making $250,000, how do people give themselves permission in terms of like moving away from being used to their parents or an authority figure, kind of giving them permission or telling them when to do something, to kind of like taking ownership themselves?
The way I looked at it now, because I had 5 startups after that, was, and I do thank my father for it. I never would have been an entrepreneur without him ramming it down my throat.
Yeah.
But every opportunity I've seen since, the way my criteria is, this is such a no-brainer that you can't pass this up. Like it would be almost like a sin if you pass this up. So I have the odds so heavily stacked in my favor when I do a new business that it's not scary. The scary part is passing it up and not doing it.
Right.
So I stack the odds because I used to be a worrywart. I'm not so much anymore, but I used to be a lot. And that's what I needed to keep myself calm. I needed the odds in my favor very heavily.
So you basically weighed, failing to missing an opportunity, and missing an opportunity was far scarier, essentially.
I flipped the risk.
Right.
I turned the risk equation upside down.
Right. Okay, so then let me ask you this from this angle. What has been, in your estimate, your greatest failure?
Steve Schneider. My greatest failure was, the short answer is not listening to my intuition. I retired when I was 36 in 2004, and 2008 came around, and I bought a 50-acre lake about an hour north of Boston, and it had 3 houses on it. It was basically a big party place.
Yeah.
And after 4 years, all of my friends had hangovers, and no one wanted to come around anymore. And then the '08 crash happened, and the lake was just sort of lonely. It was like a party place. I kind of wore it out, so I wanted to sell it. Things got complicated because banks were failing, and I found a buyer, which literally I only had one person who was interested, and I was doing a complicated real estate deal where I could make about $750,000 on the sale, but I needed to borrow about $400,000 for 14 days. And I used to be a hard money lender. It's kind of like being a bank at really high interest. So it was weird being on the flip side of it. So I called my one of my business partners at the time, and I said, I need $400 for a couple weeks. So he puts me in touch with one guy I didn't know. I never met him, never got his name. But the other guy was this guy named Steve Schneider. He wanted to see the lake because it was collateral.
Yeah.
And he came out. The minute I set eyes on him, I didn't like him. But don't be judgmental, blah, blah, blah. And I need his $400,000. So I brought him into one of my houses, and there was this massive wall unit. I mean, it was huge. And I had it made for me years ago when you had big televisions.
Yeah.
But now everyone had gone to flat screens.
Yeah.
So now it was basically almost like a massive armoire. Yeah. But it was sitting in one of the cabins, and he saw it, and this thing was nice. I blew like $15,000 on this thing. It was nice, and he looked at it, and he opens up the doors. He could tell that's where the TV should go, but now it's flat screen, so you didn't need the deep thing. And he says to me, this thing's firewood now, meaning it's only worth burning.
Yeah.
And I thought, okay, now I officially
don't like
you. And he had seen me on television, because at this time I had my 3rd startup going. It was one of the first food companies in the United States to help people with anxiety and depression.
Oh, wow.
And he liked the concept. And I had just been bought out. I was being courted or spoken to. It hadn't happened yet. And he was intrigued by what I was doing, which surprised me because he didn't like anything. He was very pessimistic.
Clearly.
I couldn't understand his interest in me.
Yeah.
And he said, do you have any other food ideas? And I said, yeah, I actually have a competitive product for getting rid of the black market, Adderall market at college campuses. Because students that don't need Adderall, some of them feel that they're at a competitive disadvantage.
So they take it for an edge.
They take it for an edge. but it's illegal.
Right.
And so what I found is that if you actually mixed 200 milligrams of L-theanine and 80 milligrams of caffeine, you would get alpha wave production for 3 hours. So it was like a test-taking concoction. It was safe, legal, FDA approved.
And you get a healthy boost.
And I was going to put it in chocolate because it tastes disgusting, and you need a heavy flavor to cover it up.
Right.
So I wanted to create Volt chocolate, and he wanted to groom it to get bought out by Hershey's. So I said, fine. And we went out to, so we did the real estate deal, but I only needed the money for a week. Mm-hmm. And my lender, my friend/business partner said, I'm going to see if they'll cut your interest rate in half. And I said, look, I asked for 2 weeks. You know, they don't have to give me a deal.
Yeah.
And he said, well, let's just ask. The guy that I never met cut my interest payment in half. My new business partner, Steve Scheider, said, business is business, and didn't cut it in half. I thought, okay, note to self.
Wow.
I can't be angry. It was business, but I did note that a stranger who I have never met treated me better than my partner.
Yeah.
So Steve then invites me out to the celebration dinner that I sold the lake. And I wasn't going to go because I was pissed. I was mad. But I thought, okay, don't, be a grown-up, go out. So I went out and I said, I'm paying for dinner. I just didn't want to be beholden to him. So I'm paying for dinner. And it wasn't a nice restaurant. It was okay. So it wasn't like a financial burden. I also didn't want to buy him anything nice. But while we were there, it was wintertime at this point. And his wife, who's very conservative, was there. And I don't know why, but she started telling me about her hot flashes. She was in menopause. And she gets hot flashes. Yeah. And I was like, okay, like I can handle this conversation, but I just thought she was too private to share something like that. So anyhow, Steve chimes in that, her hot flashes are awful. In the wintertime, she goes out in the backyard. He goes, when she's in the car, she rolls down the window and I freeze. And then he says to her, next time you get a hot flash in the car, stick your head out the window like a dog. And I was like, whoa.
The silence must have been painful.
I thought that's abuse. I was like, that's abuse.
That's abuse.
Then I thought, okay, if this is what you do to your wife, what are you going to do to me in this business?
Right.
Another note to self. So it's
a lot of red flags.
It's piling up.
Yeah.
It's piling up. So then we had to find a chocolate manufacturer. And so I was calling around. And we found this guy in Brooklyn who's been around since, turn of the century. Really old guy, but very nice. We didn't have an appointment, but he said he would see us. And during that time, one of Steve's old coworkers, his son committed suicide in Manhattan. And he had left college. He was depressed, went out on the porch and jumped. And so he was getting invited to the funeral. And Steve said to me, because I was there when the phone call came, he goes, I don't want to go. And I said, why not? And he said, because the viewing is in Brooklyn at 4 o'clock and I'll be in traffic going home. I said, the guy's kid died. Mm. Like he needs you there for support. He's like, I don't want to be in traffic. So that was another one.
Wow.
And then I noticed that when I saw his name coming up on caller ID, my stomach would turn. Mm. But then the business took off. So we were getting into colleges, and it was working. And we hired a social media person, and whatever she was doing was working just fine. Everybody liked it. And then we ended up getting on. So then I wanted to sell it to truckers because they do the long haul thing and they fall asleep. So we ended up getting on every park and ride on, or every gas station on the Mass Pike from Boston to the end of the Mass Pike. So it was all of Massachusetts. So it was moving along. And then I thought to myself, because I have a a friend, because I always have mentors. She owns about 300 buildings in Boston, and so just has a ton of money. And I was having breakfast with her, and she said, you know, the worst thing that could happen to you is that you do get bought out by Hershey's because you're going to have to spend all this time with this guy.
Yeah.
And we both put in $50,000 into the business, which wasn't that much. But then we had a capital call to do another 50, and I was just like, I'm not writing this check. And so I went to my friend Paula, the one that owns all the real estate, and I said, what do I do? She said, well, have a meeting with the guy. And she's not religious, but she's spiritual. And she said, when you sit down, just say to yourself, God, give me the right words.
Right.
Okay. And so I sat down with him, and it was a hard start. And I said, when the phone rings and I see it's your name, my stomach turns. And he's like, uh-huh. And I just don't want to spend my life like this. Like, I don't have any well-being with you. And he wasn't getting it.
No.
And so I brought up the thing with his wife. I said, what you said to your wife at dinner. And he goes, that's just how we talk to each other. I said, no, that's how you talk to her.
Yeah, she accepts it.
And that kind of hit him like a brick when he realized that that's how he talks to her, but she doesn't talk that way to him. And I said, look, I'm over 50 years old. I don't want to waste my time with people that I don't care about. And I said, I don't care about you. And I go, I'm not putting in the money. I said, you can have the company. And so he ended up, we went out of business probably about 3 weeks later. But I should have never started the business.
Right.
I knew it from the beginning.
You felt it in your gut.
I knew it from the beginning. It was my only failure, and I saw it before we even started it.
What do you think? Because, you know, you have like these two systems running at the same time. You have your conscious mind that's noticing your subconscious mind, your instinct telling you something, and you're kind of overriding that. So what do you think was the thing you were telling yourself in order to look away from that gut feeling that you were getting?
First off, message to all the men listening to this. I don't think guys listen to their intuition as much as they should. Women do a much better job of it.
I agree.
Usually my intuition is right, but since there isn't logic and I spend so much time in my head, I missed it. But where the logic part came in is my second startup was the big winner. That was a money management firm on Wall Street. So money wasn't the issue with the chocolate company.
No.
It was being able to do this really cool idea that would legally and ethically get people off of black market Adderall in college and buy legal, healthy substitutes from me. And so I just thought it was a cool idea being able to use kind of like the psychopharm area. But to be bought up by Hershey, you have to care about the money part. So I needed a money person, and he had just retired from running a publicly traded company. He was the CFO. So I thought, okay, you go be the money guy because I need that, and I don't care enough about the money, but someone needs to. So I thought he would be a good addition to what I was lacking. And I would take care of, developing the product and selling it and everything else. And so that's where I did that.
So you kind of thought it would be a live and let live type of dynamic. And there was more overlapping than you thought.
The excuse to myself was I need a greedy jerk.
Yeah. And you got one.
I got one. Yeah. It's just I couldn't stand someone.
So in some way, you kind of told your instinct what to look for, and your instinct told you that's it, you found it.
Yes. No, there are people that focus on money that aren't jerks. I happen to get both.
For sure.
The same person.
For sure. That's definitely, that's tough because there are a lot of, you bring up a good point. There are a lot of people who are very money focused, bottom line focused. I'm sure that's just the natural outcome of capitalism. You have the full spectrum. You have the people who are more than money focused, and you have the people who aren't. But how does a young person then who is looking for a seed capitalist or an investor or whatever kind of pick and choose who to bring on board? without this experience?
Meaning, how do you choose your investors?
Yeah.
I would only, and of course this is really hard because you have no money and you're dying to just grab any check that comes your way. So I get the desperation.
Yeah.
However, I have never met anyone that did a lot of money raising and didn't regret it because they didn't get the right investor.
Right.
And the perfect investor would be someone who not only gives you a check, but is in that industry.
Understands it.
They understand it, and then they can become your mentor because you will now get free consulting.
Yeah.
Because they don't want their investment to go to zero, and they can do something with it. Now, all of a sudden, like we have some records sitting in front of us during this talk. Let's say that we were going to try to do something in the music business. I wouldn't just take a check from anybody.
You're right.
I mean, you might say yes because you need to keep the lights on. I get that. But if you could get someone who was in the music industry, I know this person, I know that person, I can get you this, I can get you that. And they will be much more than helpful because the more they help, the more return they get on their checks.
The qualification has to be more than their pockets, essentially. They have to be able to know what they're part of.
And I understand you can't say no to a check. I get that. So I would say if you were looking for money, only look for people who are in the industry. Mm-hmm. So I might go to a music festival where I'm already going to be around musically inclined people. I'm not going to go to a food expo and say I have a record business I want to do something with. Yeah. So, I mean, I know quite a few horror stories.
So I see that was a very interesting one, and I think something that I also have kind of encountered, maybe not to that degree, but I think definitely it's going to be something a lot of young entrepreneurs are going to encounter more often than not. We then kind of like goes to, you said the success then was in the most successful of these six. What would you what would that be?
Oh, I was the #1 stock market timer in the world for 10 years, 1994 to 2004.
That's very impressive.
Well, I was the researcher for a guy named Gerald Appel who invented stock market timing, which is basically the art and science of predicting stock market crashes.
Okay. So give us a summary, an overview of how you would go about doing that.
To predict a stock market crash? Yeah. Well, I do it visually. You take a look at competition. So we have the stock market. Well, like let's take the stock market right now.
Yeah.
Which, by the way, spoiler alert, it's not going to crash.
No.
It's fine. However, here's how it would crash. So right now, there are only certain places to put your money. So in two very easy buckets, we have the stock market and then we have real estate. The problem with real estate is that it's not liquid. You have to wait for some stranger to buy it from you. So there's a lot of people that won't, like me, who won't even consider real estate because I don't like the lack of liquidity.
Right.
So when we look into the world of liquid markets, then we have the stock market. So from there, you basically have two places to go. Stocks, which go up and down, and then you have bonds, which are linked to the interest rate that you get them, where you get them from. But if interest rates are low, there's no money there.
Right.
And so the only game in town is the stock market. Mm-hmm. So when you have low interest rates, you don't have stock market crashes. I mean, the market can go down, you get blips. Those are buying opportunities. Those aren't times when depression starts because there's no other place to go.
It has room to be versatile, essentially.
Yeah. So when interest rates start to go up, and it's not the level of interest rates, it's the rate of change of interest rates, which I'll explain in a second, that when interest rates go up, then people say, oh, now there's a better place where I could stick my money without the risk. And then that basically takes the house that you have built and puts it on stilts.
Right.
It doesn't mean it's going to crash, but it's shaky.
Right.
And if something comes and knocks it, then it could knock over. So basically, if interest rates are higher than what they were, anywhere between 6, 9, and 12 months before, we had different trading systems. when interest rates are higher than what they were 6 months ago, then people, the most conservative, they start to move their money over there.
Mm-hmm.
Then when it's higher than 9 months ago, another wave comes over. Then at 12 months, another wave comes over. Now, some people miss that signal because right now interest rates are pretty much at zero.
Right.
If they go up to 25 basis points, people will still move money over. And a lot of fundamentalists would say, "Oh, it's only a 0.25%.
Mm-hmm.
It's not worth it." Well, 0.25% of billions of dollars and trillions of dollars can be significant to some. So basically, it's the rate of change. Right now, there's no competition in the stock market for liquidity,
because the interests are low.
Yeah, but you can see what it does. With all this talk about inflation, and they think that they're going to move things up. The stock market prices 18 months in advance. Mm-hmm. Which is why it's been going down previously. It made a record yesterday, but before that it was bumpy because everyone thought interest rates are going to go up. But it was kind of dumb. Yeah. It was a buying opportunity. So think about it. Powell says we're not going to raise interest rates until at least next year. You people are worried about inflation. I'm not. I think it's just going to be this temporary thing. He's the one that pushes the button. Yeah. So instead of listening to him, they're like, no. We don't believe you. Yeah. So they acted as if interest rates had gone up, so the market went down. Right. But then it was a buying opportunity. It made a record yesterday.
That's one thing I think people tend to forget when they get stuck in the mire of it all, is that these markets are heavily and almost completely influenced by behavior, social behavior, people's behavior.
Fear and greed.
Fear and greed, yeah. And these behaviors become almost prophetic and self-fulfilling. So
they repeat themselves.
And they keep repeating themselves. So we have something very interesting now. We have blockchain. We have cryptocurrencies. So what are from your point of view, with your heavy experience and apex knowledge on this, what has cryptocurrency changed in terms of this stock market?
Well, full disclosure, I invest in cryptocurrency and I teach a blockchain course.
Great.
So
I think we all do invest.
I'm biased.
Yeah.
So repeat the question.
So what have you seen cryptocurrency changing in the market in terms of, do people's behavior influence it just as much as gold or the US dollar or whatever it may be, or are people's behavior less influential on cryptocurrency? Because I'm seeing, I have some Bitcoin, and I personally do not enjoy how much Elon Musk has an influence on Bitcoin, right? It's like one, you think like one person should not have that much influence with 140 characters on Twitter. But is it really that much influence in the grand scale of things compared to like everything else before?
Well, as you're starting to see, my analysis is always very simple, common sense. It's not complicated. So the first start would be to look at what is the size of Bitcoin and the cryptocurrency sector compared to all the other liquid asset classes out there. And it is ridiculously small. Mm-hmm. I mean, it's smaller than one company's bond issue. It's almost negligible. Right. But it has a lot of press. Everyone talks about it. But size-wise, it's really tiny. Now, so that's its one little mark. The second one is the way that Bitcoin operates, the whole proof of work, since it is so energy intensive and slow, it's not scalable. Even if everybody loved it, Xi Ping and Biden and everybody loves it, this is the best thing in the world, it can't handle all of the world's transactions. Right. And it never will, based on the way it operates now. There isn't enough energy in the world to handle every transaction. It's slow and it's tiny. Now, the proof of work, that concept of proving that you should be the miner that wins to getting the hash, you're guessing a nonce, which is an old British word that means it's an acronym, stands for number used only once. So you're basically, you do all the transactions, but you got them right, I got them right, so did everybody else, because it's not hard. It's like being a bank teller. Yeah. But now we need the fast computers to guess, oh, is it 1? Is the nonce a 1? Is it a 2? And the numbers between like 1 and I think 3.2 billion. So that's where you need the fast computers to just guess. Is it 1? Is it 2? Is it 3? Is it 4? And so it's kind of a dumb use of energy.
Right.
Now, they could switch it to different kinds. Like there's proof of stake that says you need to own a certain percentage. You need to have some skin in the game.
Yeah.
And then you can be authorized. The one that I like is, and I don't know if anyone's doing it, but let's say everyone in this room, because there's 4 people in this room right now, let's say that we were all Bitcoin traders, that you would have to confirm and be the teller on 2 transactions in exchange for you getting 1 transaction made. So it's kind of like going to a store where you're the customer, but then you have to be the cashier 1 day a week.
Mm-hmm.
And so the way this one would work is you have to confirm as a teller 2 transactions in exchange for you to get 1 transaction done. And now we're all working together, but it would be a random transaction. You don't even know what it is. You don't know who the parties are. Mm-hmm. And I think there would be some safety in that you can't be a bad actor if you don't know whose transaction you're trying to confirm.
Yeah.
I think it's as simple as that. Mm-hmm. But they're doing it this way.
Right.
The other issue that I think everyone completely misses the point on is they think that they're independent.
Yes.
They think they're independent. No, where do you get your electricity from? The government. Yeah. And I said, all the government has to do is just shut off your juice and you're done.
Right.
And that's basically what China did last week. They're like, you can't mine here. You can't use our hydroelectric energy. You can't use our coal. And so now, what was it, over a third of the mining community is zapped, which is a great opportunity for anyone who's mining now because it just got easier to do it.
Yeah.
But it's effectively your on-ramp and off-ramp is government controlled. So if a government doesn't want it, it's not going to happen. And what I think they're doing, which I'm just one lonely biased opinion, is that it's the typical thing that a large company does with startups. They know you're there. They know what you're doing. And they just wait for you to get all the bugs out. Then they either buy you out and take you in and like you run that department, or they buy you out and shut it down. But they learn from your mistakes.
Right.
And I think that's what these governments are doing. Like they're figuring it out.
Right.
Because they can't make a mistake. Bitcoin can make all the mistakes it wants.
Right.
But once you have a digital RMB and US dollar or yen or whatever it is, you can't have this thing hacked. It's got to be foolproof.
It has to be close to perfect.
And I think once they have it figured out, then they'll be like, hey, thanks for thanks for leading the way. Goodbye.
So then do you think then that this opportunity to build wealth for people who are involved in cryptocurrency have then a very short window to do so?
One thing that I do, and people are welcome to do this and change the thing, is that if you look at the stock market like a rubber band, that if it goes up 0.25% on a day, that's not much. It's like a little stretch. Right. But if you annualize that, that's a big number. Now, when you go up 2% on a day, that's going past 2 standard deviations of an average daily movement. So that's big. That's like really stretching the rubber band. Well, once you let that rubber band go, it's going to snap the other way. So a 2% up day, it's probably not going to stay there.
Right.
It's probably going to give something back the next day. So what I typically do is I take profits when the market's up about 2%. I take all my profits of that day off the table.
So you liquidate your profits?
Just for that, just the days,
day.
the 2, if it's a 2% day or higher, I take all that day's profit off the table.
Okay. And then you basically leave whatever is left to like depreciate or appreciate, and then when it goes up again, you take that out?
So yeah, so let's say we have $100 in, it goes to 102. I take $2 off the table, sit in cash, pay rent, buy a car, whatever I do with it. The 100's left. When the market goes down, if it does, let's say it goes down 2%, it's a 2% drop on $100. It would go down to 98. It's not a 2% drop off 102.
Right.
So I'm losing less. I'm losing on a smaller base.
Right.
Now, if I'm wrong, okay, I still have $100 in the market. So it's just an easy way to take profits. If you don't know what's going to happen in the future, like if you're if you're not trying to be like a fundamentalist or say there's a reason for it,
right?
Now with Bitcoin, you could do the same analysis. Like, what happens the day after Bitcoin goes up 10% on a day? The data's there. Just take a look at it. Yeah. My guess is that the next day is probably a down day.
Right.
So when you have those ups, then you could take your profits. And when you have the downs, like if it
leave it.
Buy in more.
Okay.
If I was going to time it, I mean, I didn't time this way, but because I don't time actively anymore. But if I were going to, a simple system would be on an up day, a 2% up day, take your profits. On a 2% down day, put those profits back in. And now you have a lower cost basis at 98. So you sold at 102 and then you're investing more at 98. Emotionally, it's very hard to do.
Yeah, that was what I was going to say, because this process is very emotionally laborsome, and it's also time consuming, right? You really have to...
It's emotionally non-intuitive. That's why most people don't make money in the stock market.
Right.
But humans are never going to change their emotions.
No.
Which is why it's always going to work.
Correct.
It really won't change.
Yeah, yeah.
But if I do say to people, if you make a financial decision based on emotions, I'll take a bet you're going to lose money on that one.
Yeah.
Regardless of what you're deciding. Oh my God, it's going up. Got to get in. Can't miss the party. You know. Oh, this is different. Like now it's crashing. I can't pay my tuition. I've got to save what I've got left.
Yeah.
And oddly enough, by the time people sell out at those bottom moments where they're just wrung out, it's the bottom. Yeah. So we ended up making timing models off of that. We ended up doing it with our customers because I had 1,200 clients, and we would always get clients that would want to add money after we had a good month. Mm-hmm. And I always knew in my gut, you're going to lose money the next month. And they would, because these people were what I called star chasers. So they come in with these ultra high expectations. And the minute they come in, they lose money. Some of them would leave the next month. Yeah. And what I ended up doing is I actually did a trading system on my equity curve where I looked at my monthly returns. And it was true that if I had a losing month, the probability was pretty high. My next month would be higher. Yeah. And so what I ended up saying to people is you can only buy into me after I've had a 3% drawdown. So you have to wait for a losing month. And some people didn't want to wait. Other times what we would do is that we would put them into cash. We would open up the account, sit it in cash or a high-yield bond fund, not charge them a management fee. And then when we had the drawdown, we would put them into an equity fund.
So your part of your job was also then heavily managing expectation for a lot of your clients.
Yeah, I think one of our worst years was in 1998, we made 110%. And I had a client named Doug Von Allman. He did the IPO for Sunglass Hut. So I got the IPO money. We got $40 million. 1998, we made him 110%. He took half of it out to buy the 9th largest yacht in the world called the Lady Linda II. So our income went down by $800,000 a year. But I got a ride on the boat a couple times, which is nice. And the first quarter of 99, we were flat. And we had, I think, $80 million in redemptions. People saying, you suck, you're no good anymore. Now I thought, hey, I got 4 years, 5 years of, returns under my belt. I can sit on my ass for half a decade. No. When I was flat for the first quarter of 99, people thought that I had lost my touch. And so we got huge redemptions. And I remember flying to Fort Lauderdale to have dinner with Doug to see if he was going to take out his other $40 million, because that I was going to have to do a layoff. If we had $120 million in redemptions, I was going to have to do a layoff. So I just wanted to know if he was going to close his account. Mm-hmm. So we went out, and he's a strange guy. No, he doesn't look you in the eye.
Right.
And he has super blue eyes. They're like a shark.
Right.
But it's just weird that you have dinner with someone for 3 hours and never looked you in the eye. It's strange. And I remember he got really upset that there were breadsticks in this bucket on the table. And I snapped the top of a breadstick off. And he acted like I had picked my nose at the table. He's like a rich guy, like has manners. And I was like, okay, I guess like not taking out the whole breadstick wasn't a good move.
Yeah.
So he was pretty picky. Anyhow, finally, I just got bent out of shape with him because he's judging my manners, and I was like, screw this, I just want to get out of here. So I said, look, we got people, leaving left and right because we're flat on the quarter. I said, are you taking your money out? That's why I came here. And he shocked me. He said, He said, I have the utmost respect for you because you've been flat. All my other managers are getting churned and we're down a lot. And he goes, I appreciate you, holding your cool and keeping us flat because I'm losing everywhere else.
Yeah.
I was like, oh. And then we stayed for another 2 hours and he told me how he became a billionaire. He told me how he overcame his depression. He was a poor guy from Kentucky. And he told me how he did it basically through hyper leverage.
Right.
And he actually was sort of took me under his wing.
Mm-hmm.
Just for that night of mentorship. That was sort of the end of the conversation. But I was surprised because he's another person. I don't really like him.
Right.
I don't really resonate with him at all. But he was my biggest client, so I had to take care of him. But it was interesting. To have that whole situation.
So, where you've mentioned kind of like two, when you're talking about your somewhat failed collaboration, and this guy, and I find it interesting. I have a couple of questions that kind of like pop up in my head. One of them is this notion that a lot of young entrepreneurs and young people are fed with this notion that if they're not financially literate, they'll always lose. To some degree, I believe that to be the case. You have to understand money, the fundamentals of money and how money works, right?
Yeah.
You never really own money. It's just passing your hands, and it's what you do with it at that time. But to move kind of like into that, because we mentioned depression twice, and I personally also have gone through that, and I told myself that to whatever degree of a successful entrepreneur that I am, I have to apply those attributes into kind of like fighting and battling depression. So I told myself my mantra was, to battle depression is to be an entrepreneur. Mm-hmm. And I want you to kind of tell me what are some misconceptions in terms of people's understanding or what they think they understand about money and financial and material acquisition and their happiness.
Well, there is a phrase called the hedonic treadmill, which is basically saying if something is a material object, you're going to get used to it in a couple days.
Yeah.
So like I'm wearing this watch. So let's say that you love this watch. You see it on the internet. You want it. So before you get it, you're fantasizing about it. It's going to be amazing. I love it. I love it. I love it. And if you actually noted your emotions, you'd be pretty happy when you're looking forward and window shopping this watch. Then you get the watch, and then comes this firework of, oh my God, I got it. And then there's the next day. There's still some excitement. You keep looking at it. You don't need to know what time it is. You just want to look at your watch. But then there's the third day, where all of a sudden it's sort of wore off, and you're like, oh, it's just my watch. I don't really look at it anymore. And that's how humans function. Yeah. That if we stayed so excited about material objects, you would still be thrilled with that teddy bear that you got when you were 4 years old.
Yeah.
So it's part of being a functioning human being that we need to kind of take in these new things, absorb them into our lives, be like, okay, fine, it's just a watch. And now this is what makes us grow. I want more. I want another watch. Or, oh, the watch didn't really do it. Maybe I want the record, or I want some drapes or a car or something. Yeah. It's how we as humans grow, because I truly believe that if a human doesn't grow, it dies. You're either expanding or contracting. So if you got the same thrill out of a material object, you wouldn't grow as much because you'd be satisfied.
That's all you'd keep doing, acquiring material things.
Or you would be satisfied with the first watch you got.
Right.
But what happens with the hedonic treadmill, and this is where people get in trouble, is they go, oh, well, maybe I should have gotten a better watch. Mm-hmm. And then you go for the better watch.
Right.
And then maybe I should have gotten the blue one, so you go for the blue one. And it's very close to drug addiction, where the first line of Coke sends you to the moon, you're happy as can be, and then you want more.
Right.
But then that line doesn't do it, so now you need the second line.
Right.
And then that does it for you. Right. So you're starting to get validation that, the first, second, and third line of Coke and the first, second, third Rolex is doing the trick.
Yeah.
But eventually, you hit that wall where there's no amount of Coke that you can do when you get really addicted that it's going to do.
It's not going to be like the first.
It will never be like the first.
Yeah.
The same thing with the first day you buy a Rolex. It's never going to be, you're never going to match that, no matter how many you get after that. It's the same idea.
People are essentially just chasing that serotonin and endorphins that are produced from that acquisition of that material thing.
So you hit it. This is where you're basically, when you really look at this, and I spent the last year at Penn getting a master's in positive psychology, so I'm understanding the neuroscience of it. Yeah. I'm actually teaching a class next semester, the science of the mind, so I'm excited to talk about the neuroscience of happiness. What you're trying to do is manipulate a chemical soup in your brain, which what people don't realize is that your happiness is about 10% dictated by the goodies that you can buy, the watch and the car and all that good stuff. 40% is just what you were born with, the luck of the draw. The rest is something that you can do something about. And what people do realize is things like yoga, meditation, aerobic exercise. It puts your chemistry in a really good spot.
Right.
Where I think there's a massive gap, and it's why I started my third company, was food is literally a pharmacy for the brain. So the science is called orthomolecular medicine. So it's basically using food for medicinal function. That I was never depressed until I retired. I was 36, went off to my lake, thought everything's great, and literally the next day I said, I don't matter. No one needs me. And my phone didn't ring, and it was really, but I didn't get it. I thought, early retirement, American dream. And I didn't share with anyone that I was sad, because who's going to pity me?
Yeah.
And so I was very isolated. So of course the drinking and the smoking picked up. I was bored. That filled that hole for a little while. I basically went through every antidepressant, shrinks, went to the workshops and bought the self-help books, and nothing worked until I took a positive psychology class at Harvard, where that turned on the light bulb that you could actually study happy people, imitate what they do, and get the same results approximately. And that was when I got hope that depression is state-like, not trait-like, meaning it can change. It's not like you're just stuck with it.
It's a condition.
Yeah, and
conditions can change. Yeah.
You did something that put you there, and you can do something to get you out of it. But I had gone through everything, like acupuncture, yoga, and really they were helpful, but they were very time consuming. Nothing was sticking.
And it seems like it's essentially just you're elevating symptoms more than actually dealing with the core issue. Because I saw you said something interesting actually in one of your lectures, that how human beings are. We enjoy being in groups, right? Isolation is not a healthy human trait. I can't see. It's not a healthy human trait. And essentially addiction is that replacing those human bonds and group feelings that you have. So I feel like based on that, and based on a lot of the things that you've said, and I personally also have gone through, and I hear a lot of young people mention, is that it's just essentially just your psyche reaching this point where there's so much, and then there's a shift. And then it's like a balloon that blows when it's too much, and it blows at its weakest point. And I feel that weakest point starts with isolation, which feels counterintuitive, because one of the things that we do when we get depressed is isolate ourselves.
Yes, it's a constellation, so there's many facets to it.
Yeah.
What surprised me was my particular depression was chemical, but it was diet related.
Right.
So basically all the foods that I was eating or not eating was depleting my brain from having the chemistry that it needed. So literally I bought a book on Amazon called The Mood Cure. And in 48 hours I had my last panic attack, and that was like 15 years ago. And it worked so well that's when I started the food business. And it was based on that book, because I thought nobody knows this. There's very little money in it. There's no patent protection. But I thought it took me about $250,000 and about 5 years of hopping around to this workshop, that workshop to get this figured out. And I thought the average person's never going to figure it out.
Right.
And so I made the food company. So I went to nutrition school. Then I moved to Germany, went to baking school. So I took it very seriously. Then I came back and I got a mentor who created the first organic sugarcane crop in the United States. And so I was doing it very professionally because I didn't know what I was doing. I've never been in the food business before. We ended up getting to all the Whole Foods. So it was good. But the one thing I had underestimated, the customers didn't believe it.
Right.
They thought I was lying.
Right.
They're like, food cannot help with your mood.
I was actually going to ask that because you could literally say, hey, this pill, it makes you superhuman, it can give you superhuman intellect. But it's getting those people to try that thing that's supposedly good for them. So how did you manage to bridge that?
So here comes the pivot. First, I had to suppress my ego.
Right.
Because I really wanted to help people with the brain issues. And I thought, you know what? I can. They don't need to know about it.
Yeah.
It's still ethical. And it was a good tasting bar, so we kept winning dessert awards. But okay, because people always thought it was like a dessert.
Right.
And I ended up, it just happened to be gluten-free and vegan.
Mm-hmm.
So I started to enter these gluten-free and vegan food contests. And we kept winning them. So we were getting like all these awards.
Yeah.
And then, oh my God, the vegans and the celiacs, they just like loved me because their food in general isn't terribly tasty. Because people are trying to like retrofit it from the regular food, and it doesn't really come out. But this was built from bottom up and happened to be gluten free and vegan. Yeah. Then it was sugar free, and they loved it. It also happened to have this weird side effect that it was good for people who are on chemo. So cancer centers started to stock it, and we got really popular with the cancer centers. And then we got bought out. But my whole thing was just listen to the customer. I am now an allergy-free company. Right. And what I did also learn is, vegans tend to not be very happy as a crowd because they're low on vitamin B complex. So if you meet a little crankiness, it might be some vitamin B.
It's noticeable.
It's not. Yes, it is. So, by the way, if this is you, vitamin B stores in the body for quite a long time. So if you have a steak once a month, that's all you need to have to have vitamin B complex.
B12 especially
perking in the brain. But anyhow, it was the food business that I thought was my greatest contribution to mankind. Yeah. But I had to accept the fact that they're not going to know. Mm-hmm. They don't appreciate it. They don't appreciate this help.
I love that. You're the silent hero, essentially. Yeah, that's what you care. You care about the effects. You care about people gaining this positive effect from your product, and you just told yourself to eliminate the credit.
But it was really weird to be so appreciated by celiacs and vegans, and I just felt like, okay, thank you. Like it's like they weren't like my people.
Right.
But I did this for them, and I just kind of played along with it. Sure. So I've been to a lot of celiac food festivals.
That's so interesting.
Yeah.
So we're getting short on time, and we could go on forever. I have so many questions, but then let's bring it back to kind of like, the young. Let's say you were in my shoes currently, right? What would be 2 things that you would do to maintain your happiness, my happiness? And what would be 2 things that you'll do to make sure that whatever startup that I'm doing, or whatever project that you're doing, you're saying, that flower with that consistent state of growth rather than a spike, that there's a consistent state of growth and development, and I'm not making unnecessary mistakes, and there's development and there's progress in that arena. So what are 2 things there and 2 things in the happiness arena?
So 2 things on the happiness arena. The first one I would do is write down 3 things that you're grateful for and why. The why is what strength allowed you to have that thing you're grateful for. So you might say, I'm grateful I had a podcast today because I'm good at communicating with people. And if you do that, there's actually science behind this one, that if you do that for a week, it's more effective than an antidepressant 6 months later.
Wow.
So imagine what it does for you if you do it every day. Mm-hmm. So I would say that was the first one for happiness. The second is really noticing just for you, not what other people say, and everyone's always buzzing in your ear, I know that, but what do you want? And making sure that you do what makes you happy. So if it's wearing that really ugly T-shirt because you love it, wear the ugly T-shirt.
Right.
But really tap into what do you want and do that for your own well-being. And it's going to be something kind of weird and off the wall, which is okay. And then the second question?
Is as an entrepreneur or someone who wants to be a very successful entrepreneur, what are 2 things that I can do consistently to ensure that I'm making progress in that arena?
Make sure that the business that you're doing, you're always intrinsically motivated to do it, that it's what you want to do. I did my first business for money, and it was miserable. Glad I got the money, no complaint. Yeah. But you really need to always tap in every day. And what I always did for myself was, if I had all the money in the world, would I be doing this for free? Right. And if the answer is yes, keep going. If the answer is no, what needs to change? But if you're not willing to do a job for free because it's so cool, then I think you're in the wrong place.
Right.
The world, especially the United States, and entrepreneurship and freedom, we can carve out whatever we want. So there's no excuses of I can't do what I want. We're in a really unique position.
100%.
The second thing is make sure that you talk to at least one friend a day. It's really easy just to become a workaholic. You lose your friends. And then by the time you're burned out, you don't realize that you're on that way. But having someone literally every day that you're talking to who's a good friend, just to stay in touch with another human being, keep you grounded.
Fantastic. I hope everyone was taking notes. Thank you, Professor. This was a fantastic podcast. I wish we could continue. If not, we will definitely probably have you again some other time.
I live across the street, so
yeah. So definitely no excuses then. Thank you so much. For sure. And I hope everyone's going to have a good day after listening to this. And thank you.
Thank you.